FXBros.
What's up, people? What's up, people? We're back for another live, September 22. This is Sunday. Big. Let's make this big. Trying to find some music right quick so we can vibe. Hold on 1 second. On YouTube. Good, them boys lost. Sad the Saints lost. I ain't gonna lie to you. Hold on 1 second, guys. Let me get this shit. Yeah, man, I'm trying to find my name music. About just yeah, man. All right. I was trying to find some music. I found some. Not what I wanted to play though. Gotta put on the YouTube free. You hear me? Alrighty. Main thing the market was trying to do these past few weeks, pretty much the whole month of September so far, we've been in a bullish run. This high that we experienced in the morning of Thursday, it looked as if we broke past the high of the year, but we missed it by a pipette, I believe so. So we scroll back. I gotta scroll back. So we scroll back, and I'm gonna draw it. Let's see, duplicate this. So let's see, January 1st. This is the start of the year, Monday, January 1st. Bam, right there. What was the high of the first? Bam, right here. And we see the high is 168,392. 168,392, which I be thinking that should be high. 168,391. How to do? What will it do? I want to get it to the T. 168,392. I had to get it to the T. But if we look back in history, if we look here, you can see that the price touched it, but we didn't break above it. And if we go to the high of what Thursday did in the morning, that high will be at 168,391. So right under to the pivot of the old high. So question is, what would the market look like if we continue higher to actually sweep that high? And if we look at the daily or the weekly, do we actually have a daily gap over there? Which will be right here. And I don't see one at all. Let's look at the weekly. The weekly showing us some signs. Let's look at the weekly on the first. We do have one, but we already broke past that. So, but looking at the weekly, we step out. It's the weekly time frame right here. This little minor sell-off we had these 2 weeks didn't really engulf nothing, as you can see. Not only did it not engulf nothing, but it stopped right below from taking out the low, as far as the bodies closing below the low of this wick. So that was one sign right there that the market wanted to go higher. Another sign, we did wick back down into this little gap area on the weekly, and that did push us higher. Was still pushing this market higher. We look back in history. On the week of August 5th, we had a weekly engulfing. That still hadn't been mitigated. Even the market hadn't traded fully 100% all the way into the fair market gap, which it doesn't have to, but still in all, we didn't get no bearish closures to suggest that the market wanted to go lower. So looking at it now as it stands with the weekly already up a little bit. Let's see, what is it up? 12%, 0.12%. So not even up a percent just yet, but still in all, well, based on the weekly, it's not up. So we look at the hourly or the 30-minute, we'll probably see a higher percentage of what the market is doing right now. One thing I do see liquidity right here. I don't know if I have that marked. No, I do not. But that's cool because all that's saying is that this liquidity, if we do reach above this on the weekly, we have some a reason to be pushing up this high. And I think it was on the 4 hour. I think that was a 4 hour gap. Yeah, 4 hour gap from February 14th. So bam, we have that market pushing higher to tap into that level if we do. But we don't have time to sit here and wait all week. So what's the least we can do? Well, the next step down is the daily. What would confirm the bullish push is for sure, not only would a bullish engulfing look good right here, even though this is not our bullish engulfing, like I said, even coming from down here on August 5th, when we had that weekly engulfing, we didn't get one on the daily, but we did get a sandwich engulfing down here on the 6th on the daily after this bearish sweep down here for lows. I think this was the new low of the year, if I'm not mistaken. Yeah, so this was the initial low, and then we swept that low, grabbing that liquidity. So that alone, the daily engulfing followed by the rejection we had here off these highs, respecting these highs, leading to the end of August, going into the beginning of September. Bam, we get another bullish engulfing. So we got two situations in the market suggesting that the market is going to go higher. You know, as far as the weekly and the daily engulfing. If we break above this price, and like I said, going back to this last candle on the daily, all we would need to do really two things. One, we could close above the body, just like pretty much where it is right now. But the ultimate thing is us closing at least above this wick. At least above this wick. We don't have to close above this one, but if we engulf it to the point to where we close above this wick, or even maybe it might not be 100%, but even if we wick above this wick and still close back right up in the head, this is enough indication that the market will potentially want to make new highs, and if we can break above these old yearly highs, then it's quite possible that we may reach this old 4 hour gap from February. And that sounds about right. That'll put us probably into, especially we attack this high, sweep down, so we'll have like a 3-leg situation in this bullish scenario that will give us 1 to 2 points of interest for sales once the market flips. So we just need to keep a mindful eye on that. And that's pretty much what a daily is. Let's go down to the 4 hour and see if we see anything now that's setting up. And we could have gotten a bullish engulfing, but we didn't right here with the close of this 4 hour. We would have closed high. Now, granted, it did open lower down here, so we did have a gap. But if we open right at the close of this would be a bullish engulfing. You know, similar to how this candle set up. Not gonna say I'm like hopping to that trade, but if we do get some significance on the 4 hour, which we do have roughly 4 hours, this candle just opened 15 minutes ago. I would want to, what would get me into this trade is at least this level right here, closing above that level right there. That's the evenness. And you see how it's locked in with this high, these wicks right here, this wick right here, like everything is kind of in. Like if I put it right here, nothing is really interlocking. These two kind of like already advancing past one another. But right here is a good sweet spot. And also that goes above this downturn right here. So what this would do, this will close above these open and closes right here, and ultimately above the wicks. And that's what we're looking for at 68.23 price, 68.24. to confirm this bullish move. If we get it on the 4 hour, that would be a good area to look into buys. I mean, from that price alone, 23 to 39, roughly by like 15 pips. So show 10. You can pull a 10 out of that right quick for Sunday, going into Monday morning. Yeah, that's pretty much what we have. I know everybody was active in the markets. We had a Fed rate cut, dropped down to 50 basis points, or 0.50% from 4.5 to 4 flat. So the market should be, based on history, it doesn't have to completely follow follow history to the T. You know, we might not copy, but we definitely will rhyme. You see common instances happening in the market from the interest rate decrease. And typically what happens with that is the flood of cheap money lended by the Fed rate, in turn lended by the banks, that consumers will then use as a form of lending to buy houses, cars, and whatever the hell else they want to buy. And what that typically does will boost profits for companies, especially as they're going through all these layoffs, to further boost profits on balance sheets. And then the market will continue to go higher. Like I said, it should. It doesn't necessarily have to do that to the T, but it should do that. And the market will continue higher probably for its last little leg before we get some sort of a real type of true verbal recession, or even greater depression, you know, depending on how far they want to let this drop. And also they say typically we won't see a true bull market until we get into like the 9th to 12th month of the year, the moment after they first initially cut rates, which was last week. So we might not see a rip up this Christmas. We might not. Like, I've been kind of not betting on it, but I've been thinking that this season, holiday season, will be kind of weak. Like, I don't think a lot of people will be splurging, buying all these gifts, promising toys, yada yada yada. It's just not affordable right now. So with that being said, that's going to cause even more downturn. And I think that's what's going to spark the crash. If not the end of this year, could be into early next year. And as that free money gets infiltrated, meaning it's going to go straight to the top 1%, it'll eventually trickle down to us to where we can start spending it. So they're going to be spending it first, you know, but as further uncertainty, because probably the businesses know this. The businesses already projected that, you know, people are going to be spending less this Christmas. So let's lay off a lot of people. We're not really going to need them. We're going to need to boost profits, i.e. on our balance sheets. We're really not boosting profits for our shareholders, and to try to fight against the true weak economy as far as the spending power, and the fact that the businesses, certain businesses, are going to look good on their balance sheets because they're not spending as much for labor and insurance and 401ks and all that shit. So with that being said, I'm predicting that the market is going to have a little downturn, you know, most likely stemming from all three factors. I mean, if that's the case, I predict it to be real heavy, because I mean, we're gonna have the housing market crash. Due to that and the devaluing of the dollar, we probably gonna enter in a form of further inflation, maybe hyperinflation. You know, we see double digits percentage in inflation, and you know, that's gonna lead to they favorite Hail Mary play, which is stimmies. Everybody been waiting on them stimulus checks. Probably got one more year, maybe two, until that become a thing of reality for us. Scully, what's that, brother? I didn't even know you was on here.
What's happening, man? What's happening? Yeah, I came on a little late, but yeah, I was listening, bro.
You good?
Yeah.
You like the effect I got on my camera?
Yeah, I do. It's almost like a slow motion.
Yeah, it's called glue residue smudged on my camera lens.
Damn, yeah, I gotta get that filter, man.
No, okay. That's called when you put a sticker over your camera.
Facts. What, you was on some Snowden shit?
Huh?
I said you was on some Snowden shit?
Yeah, man.
Gotcha.
Yeah, man. But yeah, back to what I was talking about. Why they having another family reunion downstairs?
Nice.
I think it's gonna be an every weekend thing. The music is pumping, and the tequila is being poured.
Flowing.
No, it's flowing. Amanda would love it downstairs.
She would really fit right in, boy.
For real. But yeah, that's what we're expecting. We're expecting a lot of I don't know what's going to happen first. I can't really say what's going to happen from the Forex markets. We might not see too much of a crazy downturn as far as the stock markets and other type of commodities and shit may experience. I mean, you saw the downturn we had for COVID, which was weekly. Which was, see, look, that drop. This drop was way more massive than what the pandemic did. Look at that. Now, when a real recession hit and a real correction hit, that's what we're gonna look like. Over here, this really wasn't nothing. And I mean, I ain't gonna say it didn't do nothing, but compared to what 2008 did, yeah, it wasn't really as bad for the Forex as far as looking at a true selling off situation. I mean, versus this, we didn't really get that true selling off to this little tidbit right here. This right here took over, I mean, a whole lot. It tapped down all the way into 2002 levels, 2003 levels, all the way from 08. This was just a quick sell-off. I think that was just like I said, a big money grab. What we could experience in the future, again, this is all a guess. The question is, you would have to look what was inflation, interest rates, the job market right around this time, and you probably could get a better answer on where we could go if we do see similar effects from our causes in the near future, going on with the current economy right now. So we shall see. We're not in the business of predicting. This is not Nostradamus trades. We're using the tools that's given to us to put ourselves in the best possible scenario.
That's a fact, man. I think
the direction of the market.
Yeah, I think if you can really read the candlesticks,
yep.
For me, with the multi-time frame analysis, it'd be pretty good, man.
It'd be pretty good.
Huh?
You in Jabby buys? AJ and EJ look real good.
Man, what are we talking about? I was in buys.
Oh, why? But mine didn't enter for some reason. It was weird. Like I was. It said I was in buys, on Friday, but then when it jumped to when the market closed, it was like it wasn't in, like it didn't execute or some shit, which is weird.
Man, you're gonna have multiple times to get into this because
Oh, yeah, I'm getting there right now. So
yeah, I was about to say because ultimately my targets are on the weekly chart.
Facts. AJ, DJ, DJ Bites. Yeah, so we are looking good for Jappy. It's going bullish. Let's look at the GXY. Got a nice little gap to fill, so yeah, I like that. I do like that. But this is the JPY, so we would really be looking for this to sell off. Even though I do see this gap, and I called that out, so we might see some bullish push, but I'm thinking we're probably gonna see it because we have a gap down here too, so it's not necessarily telling. We got a lot of unfilled gaps down to the downside, which is clean traffic. It's not really showing it on here with these breaks in the market closures, but nonetheless, we got a lot of clean traffic to the downside. So selling off right now would be very profitable for our buy scenarios. DXY look like it's trying to push up. An Australian dollar is looking like it's in a position where we could get sales, but we didn't get a strong sell-off. I mean, this wasn't as strong as it couldn't be. We did get a lot of jolts downwards. We get a lot of jolts downwards, but it was a sale. You got profit from the sale, but it was more of a let me position myself back into buys type of scenario than a sale. So
yeah, I agree.
Even if you didn't catch this sale, as long as you had in the back of your mind that the market, we look at the weekly, overall kind of been in a bullish trajectory, even from shit. I mean, it's the weekly, but really want to go back to October 2023. We've been kind of setting a bullet, even though the highs have been holding, but a good rule of thumb when trading, when you see multiple taps to an area, it's actually getting weaker.
Got you.
So when we're seeing multiple taps to this zone, especially on a weekly, that's actually showing the signs of weakness to this area. And if you look at it, this area that revert, look where it came from. It came from all the way up here to push higher. This came from all the way up here to reject it. This came from all the way up here to reject. Now this came from here. So we looking at this, you could say that then this might be the leg we need to push past all this resistance up here because of where it came from. It didn't start its journey from down here. That's already been done. This is the consolidation. Now this could be the next breakout. We won't be sure until probably the next 2 weeks. But until then, we are definitely looking for the next scenario. Like I said, this candle, in every true sense, it could have been a bullish engulfing, but the fact that we broke down and gapped down lower, we didn't actually open at the close. It probably looked better on the 1 hour. Yeah, right here, we got the gap. We actually closed here, but we opened down here. Even though we already filled this gap and pushing higher, but it would have looked better, extremely better if we would have had this bullish engulfing here. Like I said, you could call it that it is, but I'm gonna go with what the charts are showing me and what these gaps are showing me in the market. And if I want to go by our true scenario and our true definition of a bullish engulfing, man, we really need to wait for more bearishness in the Australian dollar. That necessarily doesn't have to play out. We already tapped into these gaps area. rejection wicks from these rejection wicks. So we do have a level of this median right here. If we can hold strong, as long as the candles, I would say, especially on the 4 hour, doesn't close, the body doesn't close in this area, then we still should be good for buys. We can wick down here, but we just don't want to see no closes. And that would be a scenario like, say, if you had stops down here, which would be far away from your entry if you wanted to enter up here. But if you had stops down here looking at structure, this could be like your area of early exiting. Meaning if it came this far and closed, they got a high chance of coming down here and taking out, true liquidity down here.
Yeah, and I mean that's if you like sitting in the trade,
True.
right now or something like that. Because if you sitting like for me, I've been sitting in the trade since last week.
Right.
So because it's the beginning of the week, if it shows me something on the 30-minute, 1 hour, then I'm gonna get out. Yeah, that's how I like to do it when I'm
starting a new week.
I'm just starting a new week. Me personally, I just like to
have days to go off of.
Yes. And it just gives me more to to spread out. Let's say I'm looking at multiple pairs right now, like EJ, all the Jappy pairs are looking really good for the rest of this year. So I will be looking to scale more into those positions as the year goes on, and just kind of letting the US, the AUD, just kind of like play itself out. It is an election year, so crazy things can happen. So I'm probably not going to go too heavy, because if you even look on, the larger time frames like we have, like even on a daily and a weekly, it's just a big consolidation,
Yeah.
overall. So, you just don't know what's going to happen. So yeah, just kind of
since March.
Facts.
We've been in consolidation. We had a little sell-off here in July.
Right. So that makes sense what you said earlier, that once all that kind of the dust settles, then the story will be told and given and clearly, so people can understand, okay, we really are in this type of situation as far as like the economic climate and stuff like that. Like, hey, we've really been in a recession, y'all. We was fucking up them numbers, blah blah blah. We know y'all been out here hurting, but hey, now we finna give out these stimmies again. So it could be something like that. But yeah, man, it looks better on those Jappy pairs. So yeah, I'm gonna definitely start doing more of like the intradays and not really day or swinging too much. If it lines up and lines up, but right now those EJs looking like supreme swings.
Yeah. Me personally, though, I really believe that this Australian dollar is going to go bullish. And one of the main reasons why I believe that is, one, the proof is kind of in the pudding with the rejection wicks down here. This is pretty much what we did all year. So we
that was so close. That was so close to the last year's low.
Yeah, right down here was last year's low.
Mm-hmm.
So this is the last leg of last year. We've been inside that leg this whole year. So we've been consolidating, trying to figure shit out, figuring out what we're going to do with interest rates, all that shit. On both sides, Australian dollar and the US dollar. Now, prior to that, which we probably are going to embark on in the future if we keep going down this trajectory, look at what the financial crisis did after they started doing that quantitative easing, after they started cutting rates and shit.
Yeah, same. Yeah.
Granted, we're not coming from a low, but this was a different scenario. We were coming from a true, trusted, verbal, confirmed recession. Banks closed. This never happened before. Lehman Brothers been in the business for over 100 years, shut their business down. It was crazy. Even though after that, which a lot of people didn't talk about, it was over like, shit. really over like 200, 300 banks that closed in this term, like from that time all the way to like 2016. And still been going on to this day, like, but it kind of scaved off. So what we probably gonna see here possibly could be that same scenario. Only time will tell, but you know, if we, like I said, history doesn't necessarily repeat itself, but it rhymes. So, like I said, we might not get that.
Classic.
We might get it. We might get the sell-off. You know, we might get the recessionary sell-off that may sweep the lows of what COVID did, which the reason why we in the scenario now. You know, we may get that sell-off, and then after that, we probably gonna get a parabolic bullish push. And I'm talking about we for sure go attack these levels, 81 cents. But if we really get that push, then yeah, we coming up to here areas that the market never mitigated, never even came. Like this shit just been hanging up here for dear life. Nobody came up here yet.
Damn. Yeah.
We got a lot of areas. Like as I said, this is a key area. And the market tried to reach it here, double top, triple top, however you want to look at it. But that 80, 81, 82 cents is prime. I don't know what's up with that number, but that's a prime number.
I can see that happening, bro. Like in like the next, I'll say probably see the next 3 to 5 years.
Yeah, for sure, 3 to 5 years. Sure, the next presidency, for sure.
But like, yeah, that's what I'm saying. That's just another way to analyze the charts. But you know, as far as like breaking it down, just to see like I rarely look at like, you know, far past, you know, I just mark the highs and the lows from the last year. And then from there, it's just weekly on down.
Right.
And by on down, I mean the 15 at the ultimate low, but usually it's a 30.
Right.
You know, and just beating that up every now and then, like on your Sundays, like we're doing, you could pull out and you can kind of see far back for history, just to see where larger ranges are and areas of support and resistance and all that good stuff. But at the end of the day, it's like, man, what's going on in the day, in the session, it would what truly matters. So that's why I said like candlestick reading is so important.
Right. What happened on August 6th? Or August 5th?
I don't know.
S&P.
Let's go ahead and do some research.
What happened on Nvidia August 6th? I know it's kind of gone off topic right now, but that just kind of, well, I do see a sell-off in Nvidia. That's crazy. That's the VIX. That's showing the volatility. And that shit went through the roof. And that was the only time it did that all fucking year. And that was not the Fed rate cut. So what the hell was that? Let's see. Anyway, it's a good segue into the news.
Yeah, it looked like there was a recovery from news.
What was the news that came out August 5th?
Oh, it was August 5th?
Yeah, it was August 5th. Well, I mean, yeah, it was August 5th. That's what I'm on a daily on the VIX.
Okay.
August 5th, Monday, which is not a day that usually.
That was the U.S. job reports falls short amid the slowdown, economic slowdown. Unemployment rate rose to 4.3%, marking the highest level since October 2021. Average hourly earnings grew by 0.2% below the expected 0.3%, while year-over-year wage growth of a 3.6% missed the 3.7% forecast marking the slowest pace since May 2021. So that was like that was a three-peat. They blew it on the unemployment rate, the earnings, and the year-over-year forecast. Like shit.
Yeah, that's true. That was right around the time when niggas really started putting out the real data. When companies was like, "Yeah, we broke. We ain't making and the government was like, "Yeah, we told y'all it was this many jobs lost, but it's actually an additional 1.3 million."
Oh, when they had to revise it.
That's what that was too. So that's why the market was like, "Oh shit, everything fake, everything fake." But as you can see, August August 5th was the greatest time to buy Nvidia. Bam. August 5th, the greatest time to buy Nvidia.
Yeah, that was a great opportunity. There will be more, but yes, I do understand. Like it will be a long time before it sees that price. Probably never happen.
Yeah, it probably would never happen. And if it does, it's gonna be a shock effect. It's gonna be a wick on the monthly that'll make that happen. A weak swing down. And the reason why it's gonna be like a potential if we do have it, some kind of crash in the market, but they're gonna get a bailout. And that's gonna be the wealth transfer. All that easy money the banks was having from, you know, cheaper interest rates will be borrowed against, and that's what a lot of more money is going to flow into, these companies. That magnificent seven, just like it happened in, the crash of '08 and COVID situation in 2020. Same scenario. So yeah, let's see what we got for the news. The news. Sunday, we just had news come out at 6 Australian dollars. Did it do anything?
That explains this volume.
Yeah. So that would be Sunday's. Just a little gap down and push back up. So, what was the news? Judo, bank services, bank manufacturing. Okay. Monday, we got a lot of Euro news coming out at 3 a.m., 2:15. S&P Global Manufacturing for the GBP. We got S&P Global Manufacturing Global Service for USD. So that's probably going to be a nice little scenario for the, I guess for the GJ.
I mean, even with that high news with the euro, that can do some major things, to the charts. Like
True, it definitely could. It definitely could. I don't follow this too much.
yeah, me neither. I just see that as high news, bro.
True that, but I don't know what this situation is actually following. HCOB. What do you think that stands for? Oh yeah, let's take a look at it. Let's take a look at it. HCOB Eurozone Manufacturing Monthly Index that measures the health of the Eurozone's manufacturing sector. Hamburg Commercial Bank. Yeah. Index is based on the responses from about 3,000 companies in Germany, France, Italy, Spain, and Netherlands, Austria, Ireland, and Greece. Okay. Guess that depending on how much they manufacture.
Mm-hmm.
I mean, are they a big manufacturing country? Not sure.
I don't know. I don't know. That's what I'm saying. I just saw it was high news, so I can do something.
Right. So we do have, like I said, we got high news on Monday, S&P, and then we got the interest rate for the Australian dollar. It's gonna be a fire week on Mondays, coming out the gate hot. Tuesday, CPI for the Australian dollar, another indicator coming out at 8:30. This was coming out at 11:30, interest rate. CPI is expected to drop. So that's the consumer price index, the cost of goods. Is that correct? Consumer price index?
Yes, yes.
Down. Wednesday, new home sales. That's going to be a big one. New home sales month over month. That's going to be a big news indicator. And the reason why it's going to be big because that's at the height of all talks of TV analysts and news reporters and everybody talking about the housing market, housing market, housing market, housing market. Thursday, you already know. We got Bank of Austria manufacturing, a lot of Euro news. We got GDP growth rate. They actually have a consensus of 3% versus 1.4. I think they kind of tripping with the GDP growth rate as far as them thinking it's going to be 3%. Or that could be just another lie. Just like they lie on the damn unemployment number. So you really got to take this shit with a damn grain of salt on the cool. Durable goods. Continuous jobless claims, initial jobless claims. And then Fed Chair Powell is going to talk about what the hell he did to our ass last week at 8:20 a.m. What a weird time. So that's going to happen on Thursday. It's going to be a fire week. Friday, followed by core PCE, personal spending, goods trade balance, and the Michigan consumer sentiment.
And you got Euro inflation rate.
Yes, and unemployment rate for the Euro. So that's going to be big, big, big.
Damn, let's get it.
Big, big, big.
Yeah, volume every day, man. And please note the
unemployment rate too.
The time of when all these news releases come up. Super important. Because it's one thing to know, okay, they got some high news every day. You got to know what time the shit come out. Because if not, you get surprised and, oh, what's going on? Why is it doing all this craziness? You know, because you can forget easily.
Whew. It's not looking good in Germany, man. 6% unemployment rate. It's not good.
It's tough times, man.
It's tough times.
The pandemic affected the entire world.
Yes, it did.
That's why it's different. Let's go
back to these charts. So what you thinking for the upcoming week? We got heavy news. Got a lot of things that can push the market. What you think?
I'm still on my FX book.
Okay.
Okay. What do I think for the week of Australian dollar?
We got to give our trade picks out to our group. What do you think? Buy on Sunday and hold for dear life?
So I tell you what, I ain't gonna say that wouldn't be a bad thing to do on just looking at the weekly. But yeah, this week I'm bullish for Australian dollar.
All right.
At the end of the day, anything can happen. But yeah, I mean, just speaking of, a swing trade or something like that. Like, you got a lot of people probably taking profits, but at this area, so it could be a little tricky. But yeah, I think I'm gonna be bullish. this week on it. Anything uh, can happen. I'm actually close to taking profit on this position that I've been in since last week, which is probably like what 10, maybe 15 pips away. So yeah, when that happens, then
were you into that on that trade on that buy?
I got in at the bottom of that 4-hour wick.
The current 4-hour candle? Oh no,
No, that one to the left, that bearish wick that it created like recently. Yeah, I'm at the very bottom.
Oh yeah, nigga, I would. I mean, I don't know where you'll take profit at, but I would at least try to see if the market go break the high of the year. I mean, it's already up here.
Yeah, but the high of the year is not what
39.
Wait, say it again.
0.6839.2.
Yeah, my take profit is at 0.6835.
Okay.
So I'm right there. So yeah, once it does that, then I'm looking for it to hit or head towards last year's high. But for that to happen, for me to get back into that, then I will want some type of, I don't know, rejection or something like that just to get me back in.
Last year's high.
Yes.
Wowzers. You know what that's at?
What?
Last year's high.
Last year's high is like right around 70. I mean, 0.71.
57.
Yeah, 71.40, 71.60 in that little area right there.
Yeah, that's yeah, we got a lot of waiting for that to happen.
True.
Got a whole lot of waiting for that. I know 69 cents will probably be an area of target, especially if we break this year's high. Then we could go to 69 cents, and then maybe this gap I got up here in the high 69, like 69, 40, 50, 60.
Yeah.
Area. And then we can start talking about them 70s.
But yeah, like I said, once that happened, like once that take profit gets hit on this trade, then I'm a blank canvas after that.
Right.
Starting back, might start looking into those Jappy pairs, getting into some other ones, or scaling into that EJ that I'm on. And then pretty much like trying, like, because I'm still want to be bullish on this week, so I just be looking for other opportunities to get in these AU buys. Whatever happens, we'll see. But yeah, I'm pretty much in my take profit area. So yeah, I'm gonna wait out, and then I'm gonna start playing the regular system of 1 hour engulfing testers, and then my 4 hour engulfings with clean traffic. I can see a good 20 to 40 pip movement out of it. I'll get in, with a little bit more more weight on it. But yeah, that's where I'm at right now, because it's kind of tough to see where it's gonna go from right here. Honestly, I mean, you can see it's just moving side to side right there in that 4 hour, little range that has been there. So
we don't have no bearish engulfing on a 4 hour, nor do we have one in the daily yet.
nothing.
So yeah, it's pretty much kind of any man's game right now. It's not the only thing we can confirm though. We are coming from a daily and a weekly bullish engulfing that's still working out in its favor.
Yes, for sure. So, yes, I always want to look at history too.
You gotta go with the bullish trajectory for this week, because nothing has changed that pattern or that trend.
And that's exactly why I said that for this week. I'm bullish. If I'm looking at it right now, oh, this is a bullish chart. But I don't enter on a Sunday for the week. Maybe in the future, who knows? But yeah. We shall see, man. But yeah, that's what I'm looking at for that. You already know what I'm what I'm on for all the Jappy pairs, just to keep it real. And yeah,
Yeah.
what about you, man? What you think?
Same thing for the Jappy pairs. That last 4 hour engulfing on Friday really set the tone for those. And I know for sure, like stuff like UJ with this upwards level of profit that they can rise up against. GJ not so much, but AJ has it. EJ has it. So you got a lot of level range or profitability that can get pulled from this bullish move. GJ kind of tight. Still there, but it's kind of tight. And maybe I'm not the smartest guy in the world, but maybe it's so tight, maybe it's so close to its high because the British pound is about to experience a high news event this week. I'm not sure. I'm not the smartest person, but maybe.
Hey, you always gotta look at that, man. If it's high news, something's gonna happen. You gotta wait
And not
for the candlesticks to show you. You
yeah,
know, the candlesticks ain't gonna tell you, oh, this person said this in this candle, and then they somebody else gave out their earnings this candle. Like, no, they ain't gonna give you the information. We're just gonna show what happened.
yeah.
You know, it went up, it went down, went side to side.
We got high news every day for Germany, nigga. And it's a lot of business climate. They trying to check the climate of the business that's going on and the economy that's going on from like multiple amounts of organizations and companies. So they got two news events for that. So yeah, they're really trying to figure out what's going on out there. PMI, business climate, consumer confidence, followed by unemployment change, the unemployment rate. Yeah, they got some. Germany got some heavy news. Compare that to us. Yeah, they got some real heavy news coming out. So yeah, man. So new high of the year, Dow Jones, industrial average. Yeah, man. Anything else you want to say? We're gonna wrap it up. I think we locked and loaded. We looking for buyers overall, ladies and gentlemen.
Yeah, man. I just it's the fourth quarter, man.
All right.
Fourth quarter. You know, how you gonna you'll close the game out, man. That's all I gotta say. That's all I gotta say, man. Let's close out this fourth quarter. Uh,
Get ready for the next season.
yeah, you know, don't wait for the next year. Go into the next year like with the plan. Like, yeah. So yeah, momentum, man. Just feed off of what you did last week, and yeah, just work off of that, bro.
We got this shit, bro.
That is that. I'll see that.
Patience, patience overall. Just waiting for that real 100% undeniable setup. I know some people, especially the scalpers, may look at like, well, I don't got time to be waiting all day for the right setup. I need to trade every day. But even trading up the full hour, the full hour will give you, great setups. But at least it'll probably damn near give you like a good 3 to 4 a week. It's only 5 trading days in a week. Like, what more do you want?
But what it teaches you too is, like you said, patience. Let's start from the beginning. Like, I like trading off of the 4 hour candles and in the daily, looking at the weekly for my analysis and stuff like that. I like trading off of those time frames because I would hope that you had a life outside of the chart. So that'll give you chart time, to like look at the charts and then now, like kind of just review it over, throughout the day.
Right.
Because you're gonna need that. And but you won't enter every time. You're not looking to, trade every time you look at the phone to check the charts. Are you gonna be waiting for a larger time frame? Now you can look at it and wait on your setup. Okay, it ain't happy yet, but it did this. Then over time, you'll be able to like get those little small movements while you wait for the big move to happen. That's like, but that's only what time of just like waiting and going against waiting and saying like, fuck it, let me go ahead and get in right now. Then you get punched in the face and you realize, okay, I can't do that.
Right.
And you just go learn or along the way. Like, I would say, man, get it in. Get it in. Right now is a great time to get it in all markets.
Yeah.
So that's another thing.
Early.
Yeah. Yeah.
Get that fear out of taking losses and shit. Like,
it's all a part of it, man.
It's all part of it. Ain't nobody scared of paying taxes because that shit come out all automatic.
Thanks.
So be scared about taking losses, just like I'll be unscared, unafraid about losses, like you're unafraid about paying taxes. It's just a thing that happens. So,
that's a fact.
Yeah, man. We'll touch bases on Monday. Like I said, we got a lot of news this week, so we'll definitely keep everybody updated and from the euro. Not from the euro, from those Javi pairs we watch, close on the Australian dollar and the USD. We got a lot of news coming out, so should be some heavy volume this week. And we will follow and monitor it all.
Yes, sir.
Until then, we'll be back next week, man. Everybody, peace out. We'll see y'all next Sunday. What's that gonna be? The 29th September?
Is it?
Yep. Pretty much last day of the month for the most part.
Nice.
So you know what next week gonna be.
Beautiful.
NFT.
Beautiful.
All right, brother.
All right, man.
I'm gonna tap in with you, man.
All right, bro.
Peace.
Peace.